Good afternoon and welcome to the end of day review for today. And today is August 7, 2024, and it's a Wednesday. It's a midweek, so where we're gonna see, huge move. So yesterday we see a reversal, and then today we see another reversal. Very interesting. So the market is very volatile right now. We are still in earnings season. If we finish, it is the second quarter, and we are in week 32, right? 1 year we have 52 weeks, so we are week 32 now. So 20 more weeks to go for the year 2024. And this week, we don't have any, option expiration. But next week we have the CPI data on Wednesday. So basically the second Wednesday of the month. And then after that, we're gonna have the GDP data, which is the 29, and then the PCA data going to be August 31st. So on August, we don't have any FOMC meeting. In September, we will have it. So this week, the month of August, we'll have less event, but actually a lot of reaction right there. So the CPI data, here's the government side, August 14 right there, which is next Wednesday. 14 right there. And then we have the GDP data, which is August 29 right there. And then you have a BCA data, which is 30. BCA data is another indicator for inflation, personal consumer expenditure. Yeah, index very similar to the inflation. By the way, we do have, similar to the one that we're gonna release on next Wednesday, with CPI and BCA very similar right there. So let's see. All right, now we go into the chart to see the price action for today. Before that, let's review the ICT setup right here. So the first model right here is the ICT model, which is mark the high at the low of the PM, the previous day PM, and then let's see if it go for the liquidity of one side, then it's gonna go to the next side. This setup played very well yesterday. Yesterday, exactly what happened. Range right there. So basically, yesterday, right here. We have this model yesterday. Let's see what yesterday. Yeah, yesterday. Here the setup we have for yesterday. So basically you have a London right here. So that's the model 211 right there. You have a London, and then you have it rate London a bit, it rate one more time, and it create a full breakout right there. So beautiful. And you have the London section right there, which is rate the London south side, and then it's gonna take the buy side right there. That's ICT right there. And this one, let's go to the ICT right here. That's play out perfectly. But in this case, it's the reverse side. This is a short setup, but yesterday we have a long setup, so it's just the inverse of that. So very cool right there. And today we have a second model right here. So basically model 211 right there. And today we have a model 212, which is right there. We call model 212. Let's move it over here. Yeah, 212 right there. Let's save it. All right. So today we have a gap up, and the gap up, yeah, it will look at the regular trading hour. I mean, for this we use the electronic, but for this model we use the regular trading hour. Let's pull out a chart that you regular trading hour. Regular trading hour. Okay, right here. So remember yesterday we don't have any gap. Just to let you know. So that's no gap. So it fit well with this model 211 right there, which is the London rate. But for today we do have a gap. So this model is so well for today. You look at the magic, it happened exactly today, but it's just the short setup. This is the long setup. You see the double bottom right here, it called double bottom. The same happened today, but it's a double top. You see a double top? Man, it's how accurate I should give this model right there. You see, it's just the inverse of this model. If you do like this, you will have an inverse. I think it's negative. Oh no. Okay, so let's unlink this. For now we want to test the negative inverse of this. Normally we can use inverse for this. Okay, so you see that we use inverse, so it matches exactly the IC. You see that there? Yeah, that's what we are talking about right there. Exactly, ICT. You can look side by side right there. All right, so we have a. Oh yeah, this one we use. This one we use the electronic. Let's use the one that no electronics. So it should be time. No, equity right here, no, future. So do not show. All right. Then now we see perfect right there. See the gap down? Exactly. You see that? The gap down, and then it go down, it create. Man, it's so accurate. You see that? Yes. So the gap down exactly ICT. Wow. Opening gap down. See that? Make double bottom right there. If you want to see that, in this case double top right there, you see that exactly. This is the 930 right there. So 930 candle very critical for it right there. You see that? That is. So it's beautiful that in the Thinkorswim allow you to do the inverse, so you can see it matches exactly. And basically, this is a short setup, right? We inverse, we see a short setup, but in our reality, it's going to be a long setup, which is the one thing we want to point out real quick. That ICT gives this pattern so accurate. You see that? Mark 930. You see that break out and again, and it break out again, and then it reverse. So you see right there is a double bottom setup. So it's very accurate right there. Okay, let's go back to the screenshot we have real quick. Yeah, here's the screenshot we check, it's the gap up right there. And then you have the previous day high or bicycle rate right there. It's rate about 10 and it go retracement. And then it tried to reverse, but it failed. Then it reversed. Expansion down move right there at 10 right there, at 11 right there. So you have a gap up. This is regular trading hour. It's electronics. You can see this. This also rate of London. So it kind of mixed between the model 1 and 2. But if both of them present and give you very high quality setup right there. So let's check out the London. This one happened before. So before, yeah, it do happen before 9:30 right there. Actually, it happened after. Sorry, it's after. So it's more accurate. Go with model 2. Yep, model 2. Yeah, model 2 is very clear. Is the Euro swing at 9:30. So it's at 9:30. And yesterday is before 9:30, I guess. Yes, yesterday it kind of before 9:30. It already read the London, and then boom at 9:30 is it reversed. Very accurate right there. So this is for today right there. Beautiful short setup right there. All right, go back to our chart. This one. Of this one. Yes, so we go back. So which to let you know is not exactly the pattern that ICT specify in his setup model right there. Okay, now go back to the regular one. Let's see. Okay, so we got it. Is our is that electronics? No, it's standard. So we have to go back there and go to future. So yep, so we get our regular back right there. So we need to mark the 9:30 very critical, right? It break. And let's see, it did break hole. And this level also matched with the high time frame, daily time frame right there. So basically, that's the high of Friday. If we look at here is our daily right there. So it's the high of Friday. Actually, on Monday, sorry, high of the week right there, Monday. It's a Monday high right there. And as soon as it break to that level, it reverse. So there's a fall breakout at that level. So we can see that it break, test from above, and it break, and then it reverse, and then it's now it's break and then it reverse. Yeah, so that is a fall breakout. A little bit tricky, not so clear right here. Break it, Yes, so if we see right here, it makes sense. Break it, test from up, and then break it, and then reverse it. But however, it make another attempt right here. So we haven't, analyzed this model before. Well, if we use candle rank theory, it can give us a good idea right here at this candle. You see that the candle is a down move candle, and then you have this retracement, and then it try to reverse, so to break again, and you see that it only rate the buy side of this one. It try one. This supposed to be supposed to break the level after test from below. It's supposed to be break the level, but it failed. So that means it tells us it's gonna sell off. Let's watch in the real time how that happened. Alright, here's in the real time. You see 9:30. It raised this and don't short, yes. So yes, one more right here. Boom, that's where at 10 o'clock, you see, it flipped, boom, see that? That's what we are talking right here. It rate the buy side and then it flipped, but it's close just above the level, so test from low and then boom. The next candle at 10:15. Yeah, it looked like just that last, but here you see it go up. Yeah, you see that? Okay, look, just above, boom. And to look for 15. Let's see the first minute. Look like it's gonna up close, but then it's flipped. You wanna see the flip? Yep. So it tells us that the key candle ran theory here. So this candle take the buy side, and it go more than half of this candle. So it basically tells the next candle gonna be what? It's gonna break this range right there, and wait for it. You will see it. Boom. See that? Yes. But it pulled back. It's very scary there. You have to go in at the right time. So 6 minutes. Yeah, you have to go in, for the last 6 or 4 minutes. Otherwise, it pull back, and we learn the lesson. Pull back, it will scare us. See that? At first, boom. Right, 4 minutes, boom, right where. Boom, it hit this key level right there. At 40.31 right there. But then it pulled back. It's very strange. You have to take quick profit and get out and then restart again. See, pull back. It's pull back 15, right? 4 minutes, and then pull back. You see that? Yes, it pull back for after 4 minutes. Will be 15, 19. Yeah, 2 minutes. So 6 minutes it pull back. It looked very scary. That it looked like it's gonna. But start 21, 23. Yeah, 23 look like it's gonna be a it's gonna, go back up again. But 25, last 5 minutes, boom. Not 2 minutes, you see that? Yeah, 3 minutes right there. It come down. Boom. Oh, this candle look like, wow, it's gonna reverse. Yes, it did. It is. And we did engage on that trade. We got a good run right there. We did engage on that trade. Yeah, that's Paul for now. So this trade we do long because we know that this level, it break, and if it come back, it's gonna reverse. So that's our idea right there. And we took the trade. All right, here the trade we took, right? We know that it's gonna reverse.
Order filled.
So we're going, and you're gonna see. So we go in at
Order filled.
yes. So we add more into we add 10 more. So we
Order
are
filled.
little bit, because normally you gotta very fast, respond very fast. But we got a little bit.
Order filled.
Yeah, we add 14, 15 contract right away, because we want to do what? We want to just do one trade. We want to do two trade to pass the challenge. Two trades, so one trade 4,500. That's our goal. We try to practice that. We try to exercise experience with that reason why we go in right here. But the market, sometimes you write with the direction, but in order to time, you have to make it correct. Because right here you have a stop loss that they impose on you. So if the stop loss, daily stop loss 3,000, even though it eventually go your way, but it's the stop loss too big, they will kick you out, and you're gonna see right here, it kick it out. So it didn't go away. Let's see. Yeah, because this one is pulled back a little bit, and it over the stop loss limit. It got kicked out. You're gonna see. So we just do experiment. A good lesson learned for us. No big deal. We're here to learn. You see that? It pulled back really low right there. So basically, we learn lesson. We're going too early. Let's wait. That way, especially you go big size, the pullback right there, we will kill it right there. So we should be careful when we try to go in big. We have to wait for the last 5 minutes or so. And right here it is 45. Yeah, 5 minutes. We should go at 5 minutes, like you see right there. To be last 5 minutes, we're a little bit too early right there. We're so eager. And it just go over the daily stop limit. It kick out right there. You see that? It kick out right there. Okay, then we just we got practical. We reset them and we try again, and it worked out this time for us. So very critical. We go in. At the last 3 minutes, 5 minutes better. Don't go too early when you want to go a very big. Then wait for the last 5 minutes or so. Don't go too early because it can fluctuate, and it hit our daily stop. It don't even hit our stop loss, but hit the daily the daily limit stop loss. The top step is limit to just 3,000 for 150K account, which is 2%. 2% is the stop. But anyway, we learn our lesson. That's a good lesson to learn for today.
Order filled.
So we add more.
Order
Right.
filled.
Yes, so this time is, only the last 4 minutes. Yeah, the previous try we hit 10 contact right away. We should not do that. We should add, 1 or 3 or something, or 5. Don't go in, all in right away, because it fluctuates. You see, all right there. Wow, you see the loss right there. So we're a little bit nervous. So we see that we are about to hit buy again. I think we did hit buy again. We see the momentum, right? Shift, so let's move forward a little bit. And it's about 3 more minutes before that candle close. All right, so we add 3 more. When we see that, we see the momentum up with 3 more. And we want to just limit to half of the target profits, because the top set don't want you to, basically they want you 50%. They don't want you to, your winning day will not be more than 50% of the total target profits, which is 9,000 right there. So you better aim at half of that. And look, it's, in this case, it go our way right there. It hit our target beautifully. Yes.
Order filled.
Yes. So that is. It's just the same trade, but it just we go in a little bit early. That's we learn our lesson. You never know, so you have to take. Take risks. What we learn our lesson, that just try out with one contract first, and then the last 5 minutes, 3 minutes or so, we can add more. Don't add too early, because we can be get stopped out easily. And that is the trade we make, we take. And here's the mistake trade we take for today. I want to see the mistake we make so we can learn. Another mistake we make. All right, here's the trade before the last trade we take. Here's see the mistake we make. Basically, we know that it's gonna be a 4 breakout right here, right? So we put a buy stop, look, right here. Okay, we see that. All right. We see that it pulled back, so we know that it's gonna be create a 4 breakout. So you see that it pulled back, so it's gonna break 4 breakout. Basically, it's gonna break out the level again. It's gonna reverse the level. The level is right here. You see that when it break out the level, you're gonna reverse this level. That's what we see. So we try to put a buy stop at 53.31.75. That's what we're doing right there. So we do a buy stop. See that we do buy stop. $31, but we want to make sure that it's gonna not gonna be. We want to make sure that we put 1 point above that, and it hit our.
Filled.
Yes, he's out. So right here, our logic is, wow, that means we're right? That means you're gonna reverse. So what we do, we add more contract. and that is okay. And it's just 1 minute into that candle. We have another 14 minutes to go. So the lesson we learned is that even though we write in this direction, but we add contract too soon, we pay a big price. Normally this one have to be explosive, but it did not explosive. It give us some signal right there that this gonna be it will not be another leg up. It's gonna be a universal right there. That's another lesson we learned. So you see that we get in right, but we add the contract too soon because we're so confident that we're gonna get it because it hit our order right there, and we pay the price for that. From the profit 600, we become loss, and we hit the stop loss for the day. Yep. Let's see. You see, we hit again. We hit, we hit a
Order filled.
You see 5 contract right there.
Order filled.
Yes, we make I mean, you never know, but for sure next time wait for, it's just only 2 minutes right there. It's supposed to carry momentum very fast, but it did not materialize. We have 1,000 profit right there. We should close out right there, but you never know. And it come back. Oh, it's crazy. We should take profits, but anyway, it come back and it stop us because it hits a daily stop loss. We had too big contract, too many side too big right there, and we paid the price for that. Look, it come back is buy it. You see that? Now we are in red right there, 2,500 right away, and then we hit the stop loss today. You see that? We hit 3,000.
Order
boom.
filled.
That is the errors right there, mistake made. Anyway, we run out of time, and we thank you for your time and interest. We're only grateful for this opportunity, and we're doing what we love, and success coming our way. Bye for now, and have a great evening.